Eric today ran across an old Allianz annuity statement, and we wanted to kind of break down what some of the newer options are, maybe some refinance opportunities, and just kind of talk about how these statements work.
Their model is they take the premium in, and then they give what is called an income base. And I think it was like a 15% annual return each year, which sounds great, but you can't walk away lump sum.
So buyer beware, the myth of the income base. Every income annuity is going to have an income base number. It is not a cash value you can walk away with. If you're getting a 10% or a 15% return or whatever number they're saying on your income base, it means absolutely nothing without the missing component, which is the withdrawal rate off of that income base. Hey, I'm Drew here at LTC Tree, and I'm talking to my cousin Derek. We're business partners, and Derek today ran across in the wild an old Allianz annuity statement, and we wanted to kind of break down for those people who may have some Allianz annuity options out there, kind of break down what some of the newer options are, maybe some refinance opportunities, and just kind of talk about how these statements work. So, Derek, let's get rolling.
Hey guys, yeah, we're back with another review, kind of deep dive into a very popular company called Allianz Life. So it's a very big insurance company. They're actually out of Germany. That's the parent company. And for about 25 years, ever since I've been in business, they've been offering equity index annuities. And I ran across one the other day. They haven't been on our radar recently, but it was a lifetime income and annuity. So we kind of wanted to drill down with Allianz's current version. I think this is a 2-year-old annuity versus what else is out there right now. And Drew, I was kind of reviewing some of the numbers with the statement that I was reviewing. And what I noticed is Allianz, their model is they take the premium in. So in this case, I think they took in about $160,000 from a client a couple years ago, and then they give what is called an income base, and I think it was like a 15% annual return each year, which sounds great, but you can't walk away lump sum. So Drew, what is an income base, and how does that relate to actual money in a person's pocket?
Yeah, and we're going to do a second video specifically on the income base soon, and we're going to say buyer beware, the myth of the income base. So it's not Allianz alone that does this. Every income annuity is going to have an income base number. What I think a lot of buyers get confused about, and probably a lot of agents who sell this too, is it is not a cash value you can walk away with. So if you're getting a 10% or a 15% return or whatever number they're saying on your income base, it means absolutely nothing without the missing component, which is the withdrawal rate off of that income base. And that was another thing that we noticed about this annuity option from Allianz, was that the way they do their withdrawal percentages is actually in bands based on your age instead of a gradual increase. We're getting kind of technical, but if you've ever looked at one of these statements, you may have seen these income-based numbers being thrown around. So let's kind of break down the components that actually get you the money in your pocket. What do you think about that?
Yeah, so that's a good kind of intro into some of the details. So in this example, the lady was in her late 60s, and her income base is 4.25. So that means that $200,000 number or so number, she would get 4.25% of the income base. And that means, going on memory, so maybe it was a little bit over 200,000. She was getting about $10,000 of guaranteed lifetime income if she turned it on right now. So it was a higher income base, but a lower income withdrawal percentage. And so we were just comparing that to other companies, because we're a broker, we're LTC Tree, we work for you, not one company. And what we noticed is Allianz is giving the higher income base, but the lower withdrawal percentage. And then there's other companies out there like Athene, North American, they're going to give you not quite as high an income base, but a higher withdrawal percentage. because you need both numbers to compute your lifetime payment. So long story short, this lady, if she were to move it into a company that didn't have quite as high an income base, but a higher withdrawal base, it was going to net her about 12,000 guaranteed a year for life versus 10,000 with the Allianz plan. So going back to your point, Drew, you see this high income based number, but it's important to know that you need the high number, but there's also a number equally as important, and that's what percentage are they giving to you, which is the withdrawal percentage. So in short, Allianz was giving her 48% lower withdrawal rate than a couple of the other companies we work at.
Yeah. So what really matters is what is your actual income. When you're looking at all these columns, you can look at the shiny big income base number from any of these. To be honest, it's any of these annuity companies. They all have this high income base. Some are more egregious than others. But what really matters is what do you put in your pocket? After taxes, what do you put in your top pocket? And the way that's typically calculated is that income withdrawal percentage times your income base at the year that you begin your withdrawals. Typically, that's going to be a steady number over time, but it can start out higher and then go down lower. There's all kinds of tricks in these things. And that's why you really want to work with an advisor who knows what they're doing and who is looking at all the companies, all the options. What about refinance opportunities? Because there's a lot of people, not specific to Allianz, but just any annuity out there. A lot of people who bought income annuities and other various instruments before interest rates really went up like they are. They're leaving a lot of money on the table, aren't they?
Yeah, they really are. Because I mean, we're getting a lot of calls from people all over the country who they bought annuities really pre 2023. Because if you think back to the housing crisis in '08, that's when the Fed lowered rates and they kept them there really till I think maybe summer of 2022 is when they did the first rate increase. And so they build these products off that 10-year treasury, and the 10-year treasury is somewhat in relation to that Fed funds rate. And so when you had a low 10-year treasury, they didn't have the interest to create compelling products. So if you have an annuity that was bought pre 2023, there's a really good chance that just by doing 10 minutes of paperwork, you could just refinance that older annuity into a more modern annuity. And I've seen as high as getting 40, 50% extra income on your annuity just by doing some paperwork. And that's exactly what we specialize in doing. And it might not be right for you. If it's not right for you, we'll tell you, hey, this is not you shouldn't switch. But if it is, and that says there's probably an 80% chance it will be, make you more money, we'll let you know.
I mean, how lucky are we to have a job right now? This is kind of a moment in time where we can actually help people without doing anything make more money with their investments. I mean, that's pretty cool. And like you say, it's not everybody, maybe 20%, whatever the number is. It just doesn't work out because annuities do have surrender fees and other things. But we can more than make up for the surrender fees a lot of the time, which a lot of people don't know that. It's the surrender fees can be made up with from bonuses from some of these companies, and just the fact that the macroeconomic environment is so much better is the key.
Yeah, exactly. So if you're sitting on an old annuity and you want to see if it might be worth refinancing, give us a call. Fill out the form on our site. We're LTC Tree. And I've been doing this since '99. Drew, you're what, 2006? So we got almost 50 years of experience between the two of us. And like I said, I know I'm repetitive, but we work for you, not the insurance company. So we really will. Our mission is to find at the time you're refinancing your annuity or getting some type of long-term care insurance, what is the current best deal in the market right now at that time? It doesn't matter which company it is. We'll show you whatever the best deal that pays you the lowest premium if it's an insurance product or the highest interest rate if it's an annuity product. Thanks for
Exactly.
watching our video. We do these every week, and we'll be back with the next one with one next week. Thanks.
Okay, sounds good. We'll wrap it up.